All right, so I actually want to talk through a acquisition strategy, a user acquisition strategy that is focused based off of growth through acquisition, right? When I say growth through acquisition, I mean actually going out and finding a target to acquire and completing the acquisition with the sole intention of growing the core business, right? Very common in terms of roll-up strategies. So folks that are growing through acquisition, this is a very common strategy. What we're focusing on is actually bringing it kind of downstream. And I want to test out whether or not this is a viable potential approach. And if it is, I believe that this is something that pretty much anybody, any investopreneur could perhaps leverage or add to your arsenal, your toolbox in terms of growing your business, growing your following, or even building simple and starting. So the whole thing is going to be focused around newsletters. I'm going to go ahead and share my screen and actually talk you through it. So the goal is building a newsletter, scaling a newsletter, and looking at the newsletter business model and a newsletter as a business, all right, and how you could potentially take this, leverage it, and build something with it through buying, through acquisition, right? So I want to take us on this journey. I want to put us out there publicly in terms of what we're doing and truly do like a build in public journey, build in public process with this. I want to post it inside of the Startup Exchange community, share the strategy, and then I also want to write about and execute the strategy in public with the newsletter that we're talking about doing this with. So this is going to be like a very meta type of strategy here and conversation overall. All right. So Chris, what the heck are you talking about? So this is for our newsletter, the Investopreneur newsletter. We've been talking about launching this inside the community for a while. It's been a work in progress. And we did a lot of things to make sure that we could set this up for success, right? So the first thing in terms of doing the newsletter was the content and making sure that we were able to deliver it consistently, right? Because consistency is definitely key when it comes to building a successful newsletter. So we actually went back, go all the way back to September of this past year. We started to do interviews and host our podcast. We wanted to make sure that we could book good folks to be able to come onto the podcast, have good conversations with, make educational and entertaining content at the same time, and then do it consistently. So we started there. We started simple. It was a learning experience. We recorded, close to a year's worth of content at this point, right? So the first thing was building up an inventory and a backlog of content, knowing that we could deliver this pretty consistently. That gave us some confidence and peace of mind. The second was then the story and really being able to understand who our audience is and, what the story is. And I mean, the audience here is pretty simple. It's investopreneurs. But I mean, investpreneurship, that's something that I made up, right? Like, let's be real about it. I made it up. It was something that meant something to me. I wasn't sure if it meant anything to anybody else. So what I did was I started to go out and try to build a community around it. So we took the Startup Exchange community and we gave folks inside the Startup Exchange community this identity of investpreneurship, right? This concept of investpreneurship, a less risky approach to being an entrepreneur. And through conversations and relationships inside the community, we started to have this identity and have it take shape. And today it's pretty clear what being an investpreneur is, right? It's taking the discipline, right, and risk aversion of an investor and the passion and the grit of an entrepreneur, combining the best of both worlds and, taking a less risky approach to building a business, right? So investpreneurship is realistically a great way to also, another label could be, bootstrapping a business, right? Somebody who's building for profit, somebody who is really approaching things, with a pretty practical approach, again, building for profit and then scaling off of profitability, right? All for the right reasons of, hopefully one day exiting successfully, doing so where you're getting acquisition ready, and then potentially through that exit, being able to repeat the process, right? So with investpreneurship, we talk about go get a job, get somebody to pay you to get experience, take all that experience from that pay, go build an asset on the side, get your asset to match your income, level up, like clear goals, right? Setting clear goal lines, all these things. So that was the second thing, right? So first thing was, consistency of content. The second thing was like clarity of identity and story, right? And crafting a story for what an investpreneur is, what the investpreneur journey is, getting comfortable with that. So we did that. And now, where we're at is realistically the offer, which is the delivery of the newsletter. And through that, the growth of the newsletter and the business behind it, right? So that's kind of where we are in terms of launching our newsletter and in terms of getting the growth strategy down here. When I'm looking at the Investpreneur newsletter, I'm looking at a couple of things. The first thing is the top of funnel, right? Which is our subscribers. And behind the subscribers, there's strategies that could be put into place in terms of acquiring new subscribers, right? You can earn subscribers by, leveraging, different channels and putting out, creating content on LinkedIn or other places where you're creating value and you're capturing, subscribers through your existing audience. Earning it, right? Organically through the website and capturing and earning. You can buy, typically it's buying through ads where you can actually pay in order to acquire a subscriber through something like a lead magnet, give to get, or just pay for conversion of a subscriber. And then you have this other option, which is partner. Go out and partner with folks that already have an audience that overlaps in terms of value of, who you're communicating. So for our situation, it would be somebody, who has an audience with investors or has an audience with entrepreneurs, or somewhere in between. And we could partner up and do some level of cross promotion to be able to grow subscriber base for each other mutually, right? What I added in here is acquire. So in the middle section, which is what we're going to focus on today for this strategy, is buy/acquire subscribers. And I'm doing this because we build, buy, and sell, right? And what we look at is how to acquire companies or acquire businesses to be able to fuel and support growth, right? So when I'm talking about acquire, I literally mean, I don't mean go out and buy a subscriber through paid ads. I mean, go out and buy a newsletter that can then be integrated into our newsletter, and the subscriber base of that acquisition target becomes our subscriber base. Right? Now, how do we execute this? And what do we think about when we're approaching this strategy? The first thing that I looked at is the customer acquisition cost, right? So when we say customer acquisition cost, we mean cost to acquire a customer, cost to acquire a user. What I used was the paid benchmark of traditional paid user, paid subscriber acquisition, which is ads. And in our situation, in order to get a good qualified subscriber, the average cost was $12.50. That's what it's turned out to be. Now it's cheaper. It is much cheaper in terms of just getting a subscriber. But what I'm really paying attention to is the full life cycle funnel of folks inside of our newsletter. And I'm not paying attention to the cost of getting somebody at top of funnel here. What I'm paying attention to the cost of is somebody who's a customer and makes it all the way to the bottom of the funnel, right? So you have subscribers. These are folks that say, hey, I'm interested. They give the newsletter, the email, and they end up on your list, right? Now you're sending content out to those subscribers. Now there's a smaller percentage of folks that actually are going to open those emails, or, the emails are maybe even good, and will come in and become readers, right? Folks that actually pay attention to your content, pay attention to your journey, are engaged in some capacity. And then an even smaller percentage of that are going to become customers, folks that will actually pay you money to be a part of that journey in some capacity, whether it's for a product that you're selling, which is ideal because you're capturing folks into your business engine, your business system. And the better you can capture folks into your business system, the better you can retain them in your business system, the higher the overall lifetime value of that customer in your business system is. So I always typically like to align it into your own product, your own business system. But you can also partner with other folks, right? Similar to how you partnered with customer acquisition, you can also partner for revenue. And that's actually a great way to fuel your acquisition partnerships. Do some sort of affiliate sponsor referral revenue type of structure. Hey, check out this newsletter with this product from this partner. Send them traffic, send them subscribers, and if your subscribers convert to their product offering, you get paid a commission off of that, right? So that's like one way to do that. And then also you could just get paid sponsors, right? So the same way you're paying advertisers up here to convert, right? You're paying Facebook, LinkedIn, YouTube, whatever channel, your Google, your channel, you're converting your paid ads through to become a subscriber. Other sponsors, right, brands will pay you to send them subscribers, to send them traffic, to send them customers. So you can monetize that way as well, right? For example, you could do like an ad buy on your newsletter. That's one way to monetize, right? So those are customers, right? So that's how you monetize, and there's going to be a value to your subscriber base, right? So when I'm looking at customer acquisition, I'm really looking at the cost to generate revenue from your list, not the cost to acquire a subscriber. And for us, it's $12.50 on average, or that's what it's been, right? So why do I state that? And why is that important? It's important to know that number because when we're going to the market and now we're looking at potential acquisition targets to be able to run this growth strategy, we need to know whether or not we're getting a good deal, right? Or we need to at least have some sort of framework to work within to be able to learn whether or not this strategy is a good strategy that we could scale off of, right? Because initially the first acquisition we're going to make here is going to kind of be like a learning experiment, right? We're going to say, hey, right now we can either organically grow and earn, and earn traffic, right? Or buy traffic. But that's like a slow growth model. And there may be a faster and cheaper way of doing that. And the faster and cheaper way is through acquisition, right? So that's like the theory right now. That's the hypothesis of this whole thing. That being said, since that's the hypothesis of this whole thing, we need to test out that hypothesis. So we need a control. And in this situation, our control is, again, that known customer acquisition cost. So now when we go to market, what are we looking for? We're looking for newsletters that, acquisition targets that fall into our identity. Again, that story, right? That middle part, right? Which is the investopreneur, right? So anybody who's in an investor persona or an entrepreneur's persona, any newsletter that caters to that demographic is a potential acquisition target for good target subscribers for us, right? Overlapping market demand. So we're going to find those newsletters that meet that criteria, that ideal persona of an investpreneur, and we're going to try to figure out an acquisition deal that allows us to acquire customers cheaper than it is to either buy them or earn them. And what we're really doing is we're making it cheaper than buying them because, again, it's all about speed here, right? So we want to do it faster and cheaper. Earning is slow. Also costs money associated with that. We're not going to get economics of that. Buying subscribers is faster at a fixed cost, more expensive. We want to buy it fast, cheaper. So we're going to look at the customer acquisition cost of buying, and we're going to look to acquire and integrate. And by integrate, I mean we're going to acquire that subscriber base, integrate them into our subscriber base, and then have them become adopted readers of our newsletter, right? Integrated users. We're integrating that customer base, that audience. So here's an example of a deal that we are currently looking at, right? It is a newsletter with 12,500 subscribers. It's been around for a while. It is in our target market, definitively, of investor and startup, like entrepreneur type of space. And right now, the acquisition price of this newsletter is $3,200. Now, the newsletter market is actually like kind of all over the place. So we've been watching it, we've been paying attention to it, and there are actually some pretty crazy premiums out there when it comes to the newsletter acquisition space. right now. From my perspective, based off of what I know, which is limited, and I'm trying to learn more by executing and testing and learning. And for me, $3,200 is a very cheap lesson to buy. So I am more than happy to take this exercise and run it and hypothesize with it and learn off of it, right? So if this is a win, this is a win for everybody. If it's a loss that I'm definitely willing to digest the risk of, right? $3,200 for this acquisition. Because when I look at $3,200 for this acquisition price, what I'm comparing it to is the market. And what I'm really asking is, why is this so cheap? Why is this cheap comparative to other newsletters that are for sale in this market, trading at multiples that are much higher than this? My theory and hypothesis is maybe the list quality is old or stagnant, right? Maybe the quality actually of the subscribers is pretty bad. Maybe the list itself, maybe the content is not great, and maybe it's stagnated for a certain reason. So maybe the open rate and engagement is really low. For those types of negative reasons, I would think that the quality of this acquisition is probably pretty low. So I understand the risk, and I'm assuming the risk in moving forward and making this decision. But what I'm paying attention to and trying to really understand is the economics, the unit cost economics behind the decision. So if I'm acquiring a list for $3,200 of 12,500 subscribers in my niche, in my vertical, opted in, that upon taking acquisition, I acquire those opted in subscribers that we can then integrate successfully and then start marketing to. What I'm really saying is that 12,500 subscribers, our cost per new subscriber is 25 cents. That's 25 cents compared to $12.50, right? So again, that's skewed, because again, we said that this is the CAC number of a customer. So what we want to then factor in is what percentage of that list is ultimately going to become a customer of ours. And if the numbers end up making sense, then this becomes a good and viable potential deal for us to be able to do. Now, if 10% of this list ends up becoming a customer, in this situation, that cost per customer would be $2.56, which is way cheaper than having to pay it, right? You're getting more faster for cheaper. So we're accomplishing the goals and the objective. If 2% becomes a conversion, it's $12.80. And roughly 2%, 2.5% is pretty much that that parameter of what we're looking to figure out. We're looking at what we're really trying to do and test is, upon acquiring this, can we convert greater than 2.5% of this list into and integrate 2.5% of this list into our list successfully as customers? And if the answer is yes, we can do, meaning like 98% of it just is going to get thrown out, baby, with the bathwater. If we can just capture 2%, then this becomes a viable acquisition strategy for us, right? So that's what we're looking at, and that's what we're testing at, and that's how we back into this in terms of a thought process. And if we can do this, we can grow our subscriber count pretty quickly, pretty fast through acquisition in a pretty economically viable way, right? So when I'm looking at this, what I'm really thinking is, is this going to end up making sense? So we need to do it, to test it, to find out. Because from a high level, I feel like this is going to make sense. I've seen folks do this strategy before, so this isn't like something that's unique to us. I've seen folks do this strategy before. I've seen it work really, really well in niches, like really specific niches. Our niche is actually kind of expensive, but also acquiring customers and advertising, paid ad spend, et cetera, in our niche is also expensive. So market rate adjustments kind of make sense to a certain capacity, but things to be aware of. The other thing that I'm thinking about when I'm doing this deal is, again, the price point of this acquisition. It's like, will I be able to replicate the economics of this type of deal again? Again, I'm building the economics around this deal specifically. I want to figure out an acquisition model that's more scalable, to be honest. And I think we can get there for sure. We just need to, everything starts somewhere. So we're gonna start it here and test it out here, and then be able to back into an acquisition model that makes sense over time to be able to replicate this. The other thing I'm paying attention to here is that why factor, right? Again, I'm like concerned with the why, the risk of the deal. Whenever you're making an acquisition, it's like you're trying to figure out the risk associated with the deal. You know, where's the hair on the deal in a sense, right? Like where's the red flags? Pay attention to it, itemize it, and then either problem solve to remove it or assume it. Be willing to assume it, right? So if you can go through a diligence, identify all of the risk in that deal, and then either have an ability to problem solve of how you're removing it and pass that solution onto the seller and have them solve it, or accept the fact that you're going to and build it into the economics of the deal, or accept that you're assuming that risk without solving it and you factor that into the economics of the deal. If you can do that diligently, then you can buy, you can buy successfully, right? Big part of buying successfully is completing that process. In this situation, again, very small deal. I don't want to spend a ton of time on it. To be honest, if I wasn't creating this content onto itself, I'm probably already spending too much time on this deal for what this is. But I think that there's good content behind this. I think that there's good value that could be created for our, our community of investopreneurs. I think that this is also great content that can then be brought into the newsletter. I also think that because I'm creating this content and communicating the strategy, what I would love to be able to do is share this and share the decision behind the acquisition with the subscribers that we're acquiring, so that they understand why they got acquired and what's being done here. And, everything is just full circle from the beginning, right? Full continuity. So like I see all of these things, and because of all of these factors, that's why we're doing that. That's our why behind this. Otherwise, for size of this deal, ton of time being invested. Now in this deal, when I'm identifying the red flags, it's the things that we talked about earlier. It's like stagnation as a subscriber base. Like, are these even opted in subscribers in the first place? Like the big reason why you're acquiring lists like this is because you need opted in subscribers, right? Like our goal is to get opted in subscribers, folks that have said it's okay to send me this email, this newsletter. We need opted in subscribers. That's what you're paying for. That's what you're buying. So the first question in my mind is like, especially these like old newsletters, folks that, newsletters that have been around for a while and stuff before some of these like changes to the market and changes in the software and all that type of stuff. A lot of them, the initial question in my mind is like, what percentage of the list is good qualified opt-in subscribers? It's an honest first question that I have. The second question is how many of these emails are still good, right? Like how many of them are like just stagnated bad emails? What percentage of the list there? The third question that I have is how many of these are engaged emails or even aware of this brand? Like how active and engaged is this subscriber base, right? Is there even any value in acquiring this? Because if you can't gain the attention and garner the attention, then the conversion rate, right, to go from 12,000 to what? Like we're trying to get 2% or greater, right? Depending on the quality of this list, et cetera, that's going to dictate the percentage of that outcome, right? Bad emails, lower percentage. Not engaged subscribers, lower percentage. Older email, stagnated content, no engagement, lower percentage. So I'm going through the risk ratio there. And in the back of my mind, I'm like, will I be able to get to greater than 2%? And my gut tells me I'm interested enough to find out to be able to spend or invest $3,200, right? So just my level of curiosity alone is enough of a justification to invest this $3,200 just to see. So for that reason alone, I'm going to go yes. And if we can do this and this ends up working, then we will try to repeat this strategy. And if we could get this strategy to work, the goal for me is I would like to get to 100,000 subscribers, right? Like I feel like for a number of reasons, 10,000 subscribers is a good list. That's a really good newsletter, especially if they're engaged, engaged investpreneurs, engaged subscribers. I'd be pretty happy with that. At 10,000, it's just a matter of 10x from there. So you can overshoot to make sure you get to what you want. And that number is 100,000. Right. So if we can build a list of 100,000, where 10,000, where 10% of them are truly engaged, you guys are truly engaged, enthralled, active subscribers that really actually care to a certain, lack of a better word, care about what we're doing here and the journey and what we're trying to accomplish, that's a win. So for that reason alone, and nothing more complicated or complex than that, that's why that 100K is kind of a target subscriber goal in my mind. So that being said, that's what we're going to do. That's what the strategy is. And that's how we're going to potentially get there. Once we complete this acquisition, we'll actually implement the strategy, and then we'll test it out, and we'll do all of that live. We'll do it in public, and we'll actually do it in the Investopreneur newsletter itself. So all of this is just like a good flywheel system of reciprocity. You get more by giving, like it feeds itself, for all the right reasons type of approach. All right. Hopefully you got to enjoy this, and we'll let you know if the strategy works. If it does, you can use it yourself sometime soon.